Well, tech and startup companies around the world have been suffering mass layoffs as global economic uncertainties persist. Now, amid all this, how are investors viewing the condition of Indonesian startups? To discuss further, Metro Globe Network's Audrey Widodo spoke to Eddi Danusaputro, who is the chairman of the Indonesian Association of Venture Capital and Startups.
So with the current climate as well, how are investors viewing the startups and its profitability in the market in Indonesia?
Yeah, you can differentiate startups depending on various sectors like fintech, logistics, e-commerce, agri, health, education, and so forth. You can also differentiate versus the stages. Early stage, which is seed and Series A, and then growth stage, which is Series B, Series C, and then maybe late stage, which is Series D, pre-IPO until IPO, right? To answer your question, most early stage startups are not cash flow positive. They're not profitable, which means that they have to rely on investors' injections to sustain their business. So because they're not profitable, they're not cash flow positive, then every 1 year or 18 months, they have to do a fundraising. Like I said, seed, Series A, Series B. These are time milestones to represent fundraising milestones. And startups continue to do that. So when in this current climate where the cost of capital has become more expensive, investors are not easily investing in financing rounds as compared to 3 to 5 years ago. Normally it was easy. I mean, all of our investors, we just did spray and pray. We no longer do spray and pray because cost of capital is expensive. It's limited capital now, and we expect a higher return. So we're still investing. Yes, startups still get funding, but less compared to previous years because the macroeconomic situation has changed.
So since you mentioned the macroeconomic conditions have also changed, from your point of view, what are your insights on how startups operate and utilize investor funds? And is there any changes that should be made?
Yes, I mean, this is something I scold. I know on a regular basis, I scold the founders and the senior management of these startups. I mean, startups and founders, they fall in love with their product. They fall in love with their technology. But oftentimes, I'm not trying to generalize, but this is the reality. Oftentimes, in terms of financial management, they're not prudent, right? They think that it's all going to be easy to get traction, easy to get investor funds, and so forth and so forth. In reality, it's not. And now we're facing this. So startups, it's a wake-up call. They used to be able to easily get investor money. Now, investors are more selective. That's why what's needed now, to answer your question, is proper financial management. So the funds that are in startups' bank accounts that normally would last them 1 year or 18 months, we call that runway. The runway that maybe is 1 year or 18 months, they have to make it longer. They have to stretch that money into 2 years to last for 2 years. How to do that? They have to do efficiency. They have to reduce their marketing budget. They have to reduce their hiring budget. They have to reduce their or delay their expansion plans. They reduce their perks in terms of employees, whatever they get perks that they normally have. And in some cases, and we've seen the press, we've seen the media, in some cases, they have to do layoffs.
So with all these recent events happening for the future, does this deter you as an investor from investing in startups or companies that recently IPO'd as well?
Okay, there's two parts to that question. Does the current economic climate dampen or reduce our appetite as investors? Yes and no. We are more selective, but doesn't mean we have stopped investing. We are still investing, but we are more selective. We will look at maybe a particular sector and we will invest maybe in the top 3. Well, we think will survive, right? No longer is to be you can invest in number 7 in that sector and hope that they become number 5 3, 2, 1. Now we're only backing the winners, right? So first, are we still investing? Yes, but selectively. And we're backing winners, and we're backing startups that has proper and prudent financial management so that they can have a path to profitability, and then we as investors can exit. The second part to your question is the IPO angle. Okay. Yes, many startups that have IPO'd recently, their stock prices have gone down, right? But that's a combination of various factors. Not the least is the fact that they're not profitable and they are being benchmarked versus other listed companies that are profitable. So I always tell the founders, be careful if you do an IPO, because if you're not profitable yet, or you don't have path to profitability, then your stock price may get bullied by retail investors because you will be compared versus other companies that are actually already profitable.
So talking about the layoffs that you mentioned before in the previous question, with the recent layoffs in the startup industry all over the world globally, what are some key factors that have led to this? And is it affecting all kinds of startups in different industries and different sectors? Heidi?
Across the board, I think everybody's facing the crunch, and it's not only Indonesia. This is global. This is a global phenomenon. Even you look at the big tech companies, Meta, Facebook, and the others. They're all facing. They have conducted layoffs, right? And even blue chip companies like Microsoft, right? So this has impacted Indonesia also. Why? Because macroeconomic factors. Macroeconomic factors like I mentioned, the war in there's a war in Russia, Ukraine. Interest rates have gone up. The pandemic, the COVID-19 pandemic, all of this has made that the economy, the buying and the spending and the transaction is not as it used to be. So startups' traction, their revenues have also gone down. This means that it's less easy for them, or it's harder for them to get funding from investors. That's why, like I said, they have to make do and lengthen their runway from 1 year to more, right? And this has impacted in terms of valuation. Also, they have to be realistic, because honestly speaking, as an investor, the past 2, 3, 4 years, valuations were very expensive. So now there's a correction in the valuation of startups. I think I wouldn't say it's a great thing, but it's a good thing, because it normalizes. It brings the valuation to a much more normal level compared to historical. So I think in the long run, the ecosystem will be healthier for this. But yes, in the short term, we have to suffer some pain.
And so another question I have is, what are investor sentiments in Indonesia in regards to the current climate for startups, and what can we expect in the future? I know you mentioned that it would be healthier, but what can we expect in the next couple months from now?
Yeah, so Indonesia has always been dependent on two things. One is foreign investment, and second is local investment. In the past, it was mostly about 70-30 or 60-40 skewed towards foreign investment. So 70-30, 80-20 more on the foreign investment side compared to locals. Now we're seeing a shift because of foreign investors' cost of capital going up. They're looking for returns in other countries or other asset classes. So now you will see more local investors picking up the slack. And I think that in the long run, that's also beneficial for the market, as we are not overly dependent on foreign investment. Now, having said that, the startups also have to do their homework, which is have a path to profitability and have an exit plan. Because we as investors, we're not going to be there forever. If I or my friends invest in a startup, we're not going to remain an investor for the next 8 or 10 or 12 years. No. By year 5, maybe we're already looking to exit, because we have to return our money to our investors, right? It's not our money. If my company invests, it's not Eddi's money, it's my investors' money, and I have to return that. So startups have to think about not only growing, but eventually exiting. Now, when I say exit, people always assume that I mean IPO. IPO is not the only way for an exit. There are other ways, including acquisitions, M&A, mergers and acquisitions and such, right? So we need to explore that side of it more also.
So I wanted to clarify what you mentioned about the investors in Indonesia. Were they looking in the past to put their capital in foreign places, or are they now more so looking at the local investments here?
Now, mostly in local investors were mostly looking at Indonesia, a little bit Southeast Asia, but mostly Indonesia because we're a good market, 270 million population, middle class, strong buying power, spending habits, and such. We're a good market. But we didn't have deep pockets as foreign investors. So normally we would invest only in the early stage. That's local investors could only afford to invest in early stage because why? The pre-IPO and the later stages that we don't have deep enough pockets. And we relied on mostly in foreign investments. Now you will see that changing with valuations also coming down of the startups. Maybe the local investors can also participate in the growth and late stage.
So my final question for you is, as an investor right now, do you have any sentiments or insights about what it might look like for the end of this year and how the market in Indonesia will look like?
Yeah. If you look at this year's statistics at the association, we have some data. It's still we still grew this year compared to 2021. Hopefully that can continue in 2023, but at least hopefully we remain the same in terms of number of deals and the rupiah value of the deals combined. That's my hope. But hopefully we need the macroeconomic factors to be aligned. Some sectors I think are still very prospective. Fintech, health, edu, agri. You're seeing some in energy tech, food tech to a certain extent still growing. So the basic staples of what everybody needs, I think that's still attractive for us. And me and my daytime job, I'm still looking for startups to invest, right? So investors have a lot of dry powder. We do have idle money. We're not going to spend it like crazy. Gone are the days we conducted spray and pray, but we are still investing. And actually, honestly speaking, it's a good time to buy. And as if you own a stock, when is the best time to buy a stock? When the market, when the price is down. I mean, Warren Buffett always says, well, I forgot who said it, is the best time to buy is when the stock price is down, right? So having said that, we have to do it with caution. So a good startup, their valuation is not as high as it used to be. That's a good time to buy. So that's a good time to invest.